Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is Wednesday, May the 19th, little after 5 a.m. Eastern Standard Time. I'm a little bit late today. I apologize. First sip of coffee here. Folgers, man. Gotta have that Folgers. Okay, what we're going to talk about today, economic data, earnings. Not that there's much left of earnings. We'll talk about the pre-market activity. We'll take some stock chart requests from members if I have time left. We'll take some requests from the audience. But first up, what we want to talk about is, of course, our friends over at TrendSpider. Folks, automate your grunt work. Speed up your analysis by improving your accuracy, or I should say, and improve your accuracy. Do both at the same time by automating your grunt work using algorithms. The hedge funds use them. Wall Street uses them. You should be using them as well. They're now inexpensive enough for the retail guy. Reduce costly analytical mistakes. Find winning chart setups with their scanners and time your trades with precisions using their alerts. Anybody that's watched me once or more has seen me leverage the alerts. I use them all the time. They are my go-to resource to identify the best risk-reward entry point, and they have served us very, very well. So please use that link below. Click the Explore product button. Take a demo tour. Start a 7-day free trial offer. And if you like trade alerts, my perspective on the comments, my perspective on the markets, with my own commentary, sign up for the 14-day free trial offer to the Contrarian Trader, and you get TrendSpider free with our silver and gold level members. So use those links below. Let's get to the pre-market activity. Oh, by the way, 35% discount code on TrendSpider if you join with them today. All right. Yesterday, building permits came in slightly less than what was expected. Housing starts, though, were very, very poor. Big miss. And the thing to remember about building permits, going back to that for a moment, is that they are a forward-looking indicator. And simply because a builder gets a permit does not necessarily mean they must break ground. So just because there's a building permit taken out and approved doesn't mean there's going to be a home following soon thereafter. So are we beginning to see a slowdown in the housing market? I think it's way too early to make that call. Way too early. You have perhaps a slowdown. Maybe they're waiting for lumber to come in. Who knows? Copper prices are very high. Maybe they're waiting for them to come in. Who knows? You have the CRB index correct last week. Some of those prices came down. Maybe they'll revamp the building next month. Who knows? So one data point does not make a trend. Earnings. Walmart reported yesterday. Home Depot. Maybe we'll take a look at some of those stocks today. Baidu did report. And one of our members sold naked calls on that, and he's doing well. So that's good to hear. Today, Cisco. This is what I usually mark as being my end of the earnings season. When I see Cisco report earnings, we do have Lowe's and Target in the pre-market, big numbers. And then, of course, on Thursday, AMAT, Palo Alto Networks, Ross Stores. And on Friday, John Deere. CAT was on our watch list as a potential trade going into this new trading week. It's going to be interesting to see how John Deere does. Let's go to the pre-market activity. Pardon me with the sniffles, folks. All right, starting off, we'll come back to gold. I always like to begin with the dollar first to get a feel for what it's doing. The dollar had a real serious correction yesterday. We are up this morning, but we are sitting with an 80 handle. And this is significant. We have been waiting for a break below 90 on the dollar for quite some time. We got it when we closed there. They did try to rally it back overnight, a little bit of a fade, but we remain up. What does that mean for precious metals? Back to gold. Gold had a fantastic Monday, stalled out a bit yesterday, and we're down slightly today. The thing to remember with gold is that what we're in right now is what you call, at least on a 4-hour time frame, is a megaphone formation. We are putting in strong, higher highs in terms of a rising resistance level and a moderately downward sloping lower low as support. So this remains a healthy chart. We are long of the silver miners, gold miners, silver, and silver miners. Speaking of silver, silver really taking it on the chin today. Down over 1.5% on the stronger U.S. dollar. And frankly, though, silver got a little bit frothy and it needed to pull back. No big deal. I think this is an opportunity. So we'll be watching for support levels on silver. We'll be sending out alerts to members when we execute and add more to our position. Because what we want to do is we want to build on strength. Now, on Monday, we booked profits in natural gas. A strong move up higher. We opened up the trade on Friday, and we used a leveraged ETF. We booked a 10% profit within a 24-hour business period. And yesterday, what I did is we opened up a naked put position. What does that mean? Well, before I go to Boyle, because I don't know what kind of type of price activity we're going to see there in the pre-market, but let's use natural gas first to do some analysis of how it's behaving. I kind of figured that we pull back and do a retest of this rising support level on nat gas. So that being a known, or that being a thesis, because we had bounced off of the support level before, like back here, close enough for government work, and here we are yet again with a potential bounce. No guarantee, but the probabilities are on our side. Now, when you bring up Boyle, which is a leveraged ETF, putting you long of natural gas, yesterday at around 25.90 per share, I opened up a naked put position. Now, you hear put, you may think, oh, he's bearish on natural gas. No, it's actually a bullish trade. Why is that? I did not buy the put. I sold to another trader who I do not know, who I'll never meet, and who will hopefully I'll rip their face off by making a profit off of them by selling them a put, which is a bet that natural gas, or Boyle in this case, is going to decline. And let's just round it up. Let's just say my basis cost was $26 per share. I brought in a premium of $1.90. That brings my basis cost down to $23.10. Were those shares put to me by July the 2nd? That's our strike expiration date. So technically we're back long of Boyle, but this is just a way of getting back in, but with a discount. That being said, we have limited upside, right? Our profit is capped at current unless I roll up at $1.90 per share, but that's okay. We already made 10%. Right now, everything else is just gravy. So natural gas looking good, and I'll share with you on a weekly time frame what natural gas is looking like. Yes, we are now down on the week. However, we broke out last week out of a long-term downtrend. So this is why we're bullish on natural gas, not just in the short term, but longer term. So if you have any questions on naked put selling, anything, I don't care. Ask me my hat size. Leave a comment, and I'll answer for you. Let's take a look at. And I have 10-year Treasury notes in front of me. This is important. And then I want to go to oil, because right now the three most important charts to me is the 10-year Treasury note, which is what we're looking at current, back to a 4-hour chart, and the US dollar and the price of oil. Why do those matter? Well, oil influences energy, it influences the banks, it influences interest rates, it influences perception of the health of the U.S. economy. If oil is weak, especially light sweet crude, which comes out of Texas, well then the U.S. economy is weak. Something's wrong. If the bond market is weak, that means yields are rising. That's not good for your megatech stocks. Or anything technology for that matter. Yes, you'll have your one-offs that'll do well. But at current, what we're seeing is the 10-year Treasury note this morning declined yet again. That means yields are inching up. That does not bode well for stocks. So before we pull up a chart of technology, the NASDAQ 100, whatever, we always want to know what the bond market's doing. Before we pull up a chart of gold, we want to know what the dollar's doing. So now that we know, I kind of know what to expect on the NASDAQ 100. We have yields which are inching up. That does not bode well for the NASDAQ 100. Let's click the button. And we are down just over a percentage point. Now, I wish I could say that I was sad to see this. I am not. We added more. Let me rephrase. We're already short of the small caps. We reopened our short position of the NASDAQ 100 yesterday. We are already positioned short using options on Microsoft, and we're already short of the small caps. So this morning, again, we're down 1%. This is what I like to call being on the other side of the mountain. What does that mean? Well, back over here, when you were trekking up the mountain, you were putting in higher highs, climbing up that hill. You hit the pinnacle. Then all of a sudden, you're walking down that mountain. And this is a slow but steady correction. Do we crash? I don't know. I'm not that smart. And I don't want to be hyperbolic. I don't want to try to play that game with folks. But as it stands right now, this is a chart that's under pressure. And that's as honest as I could be. Moving on to the Russell 2000, which again, we are short of. We are off the lows of the session, but we are down over a half percentage point. Now, what I'm looking for here, and I may not get it for all I know, this is not me being arrogant whatsoever, because I've been short of the Russell 2000 for a couple of months now, and it has done absolutely nothing. I've had times where I thought it was going to break out, and I was going to have to stop out. There have been times where I was getting ready to pull the trigger and looking to add more on a breakdown below this lower band of support here in red. Each time, head fake. So I am not sitting here saying we're going to make $1 million being short of the Russell 2000. Will I make money here? I don't know yet. The market's going to tell me that. But as it stands right now, what you're looking at is a very elongated, I'm at the point right now where I'm going to stop talking about it, but a potential head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline here. I have these lines in yellow, which the lower band at least marks a tripwire to the downside. And that has been somewhat porous. You can see it was support here, support here, support here, support here, failed here, recaptured here, failed here. So this is not a time to buy the NASDAQ. Excuse me. It's not the time to buy the Russell 2000. It is not time to short the Russell 2000. This is time to sit, watch, wait. The markets will dictate which way to trade your portfolio. So the Russell, weak this morning. The S&P 500. Before we take a look at the S&P 500, I want to take a look at what oil's doing. Because it's been oil, the banks, the transports, which have been leading the market up higher. And as I went over last night on Market Wrap, and it was really brought to my attention by one of my fellow members, Sina, who, as I was doing a live stream last night with members on a private forum, he was saying, hey, Bob, look at the banks. And sure enough, they had gotten clobbered. Let's go with light sweet crude. Now, light sweet crude, very, very important to the economy. And we have been stalling out here. Our last high was back here on the 18th, but nowhere near the high that we put in back here on, March the 7th. So can you call this a consolidation? Of course you can. But what I want to bring to your attention is this, is that your RSI is putting in a lower high. And it's weakening. We did manage a few days ago. When was this? The 17th, not too long ago. We did manage to break out, but it was a head fake breakout, and then we rolled back over. So be careful here. Warning flag on the track for oil. What else do we have here? Let's go back to the S&P 500. Okay, so the S&P 500 is down over a half percentage point as well. We have lower highs being put in on price. And of course, as you saw with oil, you're seeing here as well on RSI, lower highs and lower lows. Yes, you have your short covering rally, which will occur, breaking out and then ultimately rolling over. This is a dangerous market to trade. It's a very dangerous market. You're getting signals of a potential breakout. Hey, let's face it. We broke out back here on price. Any reasonable trader would say, you know what? Continuation move up here only to get hammered. This is why you need to watch your volume. Volume matters. There's been absolutely no institutional buying of late. What you did see late yesterday, if you take a look at a 15-minute chart, and I warn about this with members, we'll just use the S&P 500, we're here. Bring up a 15-minute chart, and you just saw some ruthless selling into the close yesterday. Let me bring up a 5-minute chart where I get some timestamps. Some ruthless selling into the close yesterday. Here. So this was on volume. Take note of the volume bar. Same thing holds true if you bring up the Russell 2000. Here was the close. Hammered, 5-minute chart. So the lesson learned here, folks, if you take a look at a daily chart of the Russell 2000, the S&P 500, well, it's fairly light volume selling. The however is in those final minutes of trade, institutions are opening up the spigots and they are dumping. Classic stock market fading by institutions. That's why you do not want to go buying or chasing the market early on in the daytime. Wait and see whether or not these guys are dumping near the close. Sometimes in a market like this, the best thing to do is sit in cash, man. And if you're too heavily weighted to the long side on margin, lighten up. Lighten up while it's still in your control. Let's take a look at some chart requests here. I gotta go to the members area. Should have had this ready. All right. DraftKings, first up request. We'll be using TrendSpider. Folks, I'm not seeing any comments come through, and that's not by design. I would ask if you're able to comment, but you wouldn't be able to answer, would you? Where is live chat? Enable live chat. That's on. All right. Looks like you're able to. Can somebody please just drop a comment in, just so I know that the live stream is on. Very quiet this morning. All right, DraftKings. DK. Now, what I'm going to warn about here with DraftKings is that it is a consumer discretionary name. And consumer discretionary names got hammered yesterday. Let's go to the weekly chart first. Now, DKNJ this week has not put in a new weekly low, which is somewhat bullish. Now, TrendSpider is picking up support here in purple. I'd prefer to use a different support level. Right here at the lows of this volume shelf. You can see I've gone over this chart quite a bit. Let's get rid of all these. Start fresh. There we go. Okay. So DKNG would be interesting to me on a weekly time frame. Let's set an alert here. Because this is a market under pressure. You got to demand your price when the market under pressure. Hope is not a strategy. Let's wait for it to come to us. Let's see whether or not it's able to hold support without having skin in the game. If it does, then perhaps if the market turns, we can open up a position. Not right here. Not right now. We'll keep this active for the next few days. And this is a time, folks, where if you have those stocks that you've always been looking to buy, you have a market under pressure, build that list. So the weekly chart, I wouldn't buy it here. Wait for your alert to fire off. Daily chart. Yeah, I don't see a particular reason, a compelling reason to go chasing here. And in fact, I would make the argument to avoid, because what you're seeing here is resistance above, as noted by these wicks, shadows, topping tails, call them cupcakes, it doesn't matter. You're seeing resistance at 45.22, which acted as support back here, now acting as resistance. Classic case of do not buy here, wait for a pullback or a breakout on a weekly time frame. I don't want any sensitivity, not resistance. I want to make sure we close above it. Remember, yesterday we saw institutional selling into the close. You want to wait until 3:59 Eastern Standard Time to pull that trigger. That's the leverage we have, or the edge we have over big traders, is that we can wait late in the day without having to worry about moving the market to make our moves. And until these fire off, we forget it. I don't even want to think about DraftKings until it comes to us. Boeing, next chart up. Boeing daily chart. I'm going to come back to this. Boeing daily chart is actually looking pretty good. We're going to come back to this. We've been watching this for a while. We've traded it. We've done well. This is another one where I have a lot of annotations. So on a weekly time frame, we're flirting with a breakout. We are not there yet. It's only Wednesday, 3 full trading days left to go. A lot can happen here. Yes, we're up on the week. That can change. For all I know, we could go to all-time highs this week, or we could break support. Who knows? Way too early to make a call on Boeing by using a weekly chart. But at current, it looks somewhat encouraging. We're above resistance. These moving averages are going to act as overhead resistance for us. Let's go to the daily chart. Now, the daily chart looks very, very good, with the exception of one thing, which I'll go to in a moment. We broke out on the 14th, 17th. We held that breakout. They tried to take it down. We tested support and reversed it. This is the market sending you a signal that there are buyers below, this key reversal bar. The problem is that they rallied it yesterday only to reverse it to close it well off the highs of the day. So this is just the opposite. This is the market saying, hey, listen, man, you have some sellers above. I don't know if you can see this line here, but there's a line in green. Volume was very light. So what's the play here? Simple. Wait for it to pull back and retest support yet again. No rush. We know there are sellers above. Keep a little bit of sensitivity. Touch, bounce, break through. If it breaks through support, I'll be eyeballing the 190 mark. That's the level I've been watching for quite some time as an entry point. And we'll keep this active for a few days. I want to check in with seasonality. I want to see how we normally do during the spring months. And this goes back 10 years. We can go back a bit further, given that it is Boeing, of course. Let's go back to 2009, post-financial crisis. May is a traditionally weak month, usually down below the 50% mark on a closing basis. It begins to improve in June, July, and then it just drops off a cliff in August. But August is the month that you really want to entertain buying Boeing, because then we go into a very, very seasonally strong period of time into September. So you can run scans here on TrendSpider using seasonality. But Boeing, you could bet your bottom dollar will probably be long at this the depths of the sell-off in August, if in fact that does occur. So seasonality, no rush here in the month of May, but it does begin to improve in June, July, falls off in August. So no real edge in terms of seasonality this time of year. And with that, folks, I'm going to say everybody have a very profitable trading day. If I could ask you to smash that like button and subscribe to the channel, that'd be great. We'll be going live tomorrow night, as we always do. Thursday night, Stock Charts Live. That's where we review the closing price action on a weekly time frame. It's frankly the time of the week where we begin analyzing how we want to position for not Friday, but for next week. So join us, please. There's a link below. Enter your name in any one of the opt-in email lists that we have. One is a 5-part video tutorial on our favorite candlestick patterns, and the other is just simply to get notified 15 minutes to a half hour prior to us going live. Don't enter your email on both of those lists, or else you get multiple emails and you get ticked off at me. Just enter it once. That alert goes out to everybody on our email list. And until then, folks, again, have a profitable trading day. Be careful of this market. Wait until the end of the day before executing a trade, so that way you're not getting lured in by these thugs on Wall Street. Be well.